Hello guys, welcome to another Wine Investors video. Well, sitting here in California, it really feels like the world is falling to pieces, doesn't it? I hope you're actually safe and you're doing well. On the bright side, at least wine prices are not plummeting like the stock market. If you had the same money in stocks as you do in wine right now, you would be down substantially. I'm hoping that you don't, but $7.2 trillion was wiped out of the stock market in the last month. And when we had the crash in 2008, if you remember, it actually took the stock markets 3.5 years to recover. Just think about that for a moment when your broker tells you to buy the dip. Wine investment keeps you safe when the stock market crashes. But you need to invest in enough cases of wine to give yourself a good chance of making a stable and a decent return. Now, if you're only focused on selling wines without replenishing your portfolio, it is impossible to make any kind of return because there's no new wines coming in to grow your portfolio. Sometimes I do see wine investors selling more wines than they're buying, but this isn't growing the portfolio, right? It's actually shrinking it, and drinking it is a different story. So the wine market is expected to do very well following the recent stock market crash. I wouldn't say immediately, but give it say 1 or 2 months as investors try to put money where they feel is a safer bet. Now is the time to invest before the rally starts, so you're actually ahead of the curve. I can go in now and negotiate. There are some desperate sellers in the market, obviously because people have lost a lot of money in the stock market and perhaps feel like wine is a solution for them to access cash quickly if they're short or cash flow problems in their business. But if you're divesting, i.e. selling off your wines, then you shouldn't really be hoping for too much return from your wine portfolio. So remember, growth and wealth accumulation are actually the key goals. Now, if you open your wine portfolio and you haven't made a new investment for over 12 months or within the last 12 months, then it really makes it very hard for you to see growth in different phases of the market and to be able to get in and out at different times. And of course, your wines may be getting too old for investment. Investment wines will outlive us. They last for a very, very long time. But I would keep a wine 3 to 5 years as an investment, and then I would sell it for a younger vintage, regardless of what return it's making for me. There are a couple of exceptions to the rule, but basically that's, a good guide. Now, how balanced is your wine portfolio? Are you heavily weighted in Bordeaux? Or do you have too much Champagne, or do you have too much Rhone Valley? How many wines do you have in your portfolio? You can always ask me to assess your portfolio and your collection, and I'll be happy to give you some advice. And I won't charge you, of course, because I'm good like that. Now, every wine investor should have a target of at least $100,000 invested in fine wine. If your portfolio is a long way off this, then it really is time to start thinking about adding some capital to your portfolio so that you're giving yourself the best chance of success. Did anyone advise you not to put more funds into wine? I expect they don't know much about fine wine investing if they did. Has anyone ever told you that you can never have enough of a safe asset in your portfolio? Right? Well, has anybody ever told you that wine is a high-risk investment? Okay, well, I've proved in the last 20 years that wine is far more stable than the stock market. Trust me, I know. I was in the stock market for many, many years. Stability is the key to long-term wealth. Don't listen to them because they don't know what they're talking about if they tell you wine is high risk. A high-risk wine investment is like buying a fifth growth wine blindly from somebody that you don't know and not doing any due diligence on them. The way that we invest in fine wine is extremely low risk with great upside. If you've sold more in your portfolio than it's currently worth, yet you're trying to at the same time grow a nest egg, but you're selling more than you're reinvesting, then this reduces your chances to substantially grow your nest egg, right? Think about it like this. If you don't plant new seeds in your field as you harvest, it becomes impossible to get good results. Hopefully by now you catch my drift. Now, I'm always available if you need to discuss your portfolio. Just reply to me and drop me an email or If you're watching this on YouTube, you can click the link below, you can book a call with me. I'm happy to have a 10-15 minute chat on the phone. I do find it's actually much faster to get an answer to a question over a quick phone call. So yeah, thanks for watching. I hope you found this informative. Stay safe. As I say, we all know it's a dangerous world out there at the moment, but stay safe, and I hope to speak with you soon. Take care.